Now, for a closer look at the world's economy and global trade, I'm joined by Peter Morici. He's Professor Emeritus at the Robert H. Smith School of Business at the University of Maryland. Welcome to the show.
Nice to be with you.
Now, let's start by looking at this UN report, which really called for an end to some of this fiscal austerity that we saw since the global financial crisis. They actually blamed it for undermining job security for millions of people and even stalling women's progress in the workforce. Just how much have government austerity measures affected global growth?
I think quite a bit. In Europe, for example, there's a lot of imbalances. Basically, the Club Med countries, the euro is too strong for them. For the countries in the north, it's too weak. A single currency isn't making sense there. As a consequence, they have big trade deficits. They borrow a lot of money to pay them. And then when they can't borrow anymore, they have to have austerity. But they don't get at the fundamental problem. Austerity doesn't fix what's broken in Greece, Italy, Spain, and Portugal, and that is the trading relationships with places like Germany and the Netherlands.
So given that people are blaming basically fiscal austerity for this, on the flip side then, does that mean that removing that option would then spur global growth?
No, I don't know that it would, because I don't know that anything is going to get the Germans to change. I mean, the Germans and the Chinese are of the view that you have to export to grow. That's nice. But if somebody else has to have a trade deficit all the time, then they are going to have what the report talks about, inadequate demand, too much debt, and so forth. Let's take the United States. 60%, to ameliorate all these problems, 60% of the U.S. budget now is entitlements programs, some form of assistance to people.
Right.
Over the next 10 years, that'll be 100% at present levels of taxation. It's hard to imagine that the United States could, for example, spend more money in that context, because it has to borrow every nickel it spends, other than for things like Obamacare and aid to dependent children and so forth.
Now, speaking of trade deficits, we know that that's something that U.S. President Donald Trump has cited as one of the reasons he wants to pull the U.S. out of a lot of these multilateral and bilateral trade agreements. How much of the picture, though, does that tell when you're just looking at trade deficits?
Well, just pulling out doesn't do you a lot of good. One of the problems we have is that the original GATT and WTO was intended to be a game played by market economies, and that exchange rates would be flexible and adjust to compensate for differences in productivity growth, labor costs, things like that. Today we're involved with several mega economies, the Germans, the Chinese, that have huge trade deficits, and there's an inability to really have the kinds of exchange rate adjustments we need. And so with that in mind, it doesn't work. Now, in the case of China, it's really not a market economy. They themselves say this is a socialist market economy. It's a different economic model, and they even offer it to the rest of Asia as an appropriate path for development. Right. That's fine, but the existing structure doesn't deal with providing for a harmonious interaction between the two societies. We are headed for a confrontation with China, and the Chinese need to understand that dodging, for example, the confrontation on North Korea just puts it off. It just puts it off. Eventually, there's going to be a major confrontation on things like trade, sea power, things of that nature. Now,
China would say, though, that the path should be dialogue. We shouldn't have this, as we're seeing with Donald Trump, this kind of rush to pull the trigger, as it seems. Is there not a middle ground, perhaps? And we have seen that also China is making efforts to open up its economy.
I don't believe that they're making much of an effort at all.
Why?
Because they replace one trade barrier with another. The trade surplus gets bigger and bigger. We've had dialogue after dialogue with the Chinese, and things never get better. We need a fundamentally redefined relationship with China that recognizes its rather significant place in the global economy for its part, but also recognizes that the United States can't bear this trade deficit and adequately grow. The trade deficit is a significant reason why, since 2000, the rate of growth in the United States has only been 1.7%. I'd like to ask the Chinese whether they would have the stability they enjoy today if they had had 1.7% growth over the last 17 years. I say stability because they don't have the ballot box as a release. The populist movement that elected Donald Trump was essentially a response to that. That said, I don't think the Trump trade team has the slightest idea what it's doing. Their trade minister is 70 years old, their commerce secretary is 80 years old, and they're using tricks from a grab bag from the 1960s and 70s. This ethanol thing just creates a lot of tension. It doesn't solve the fundamental structural problems. They behave cluelessly. They're like the person that's in your office that says, I'm angry. You're not paying attention to me. Okay, what do you want?
Well, I mean,
I don't know what I want.
Well, I mean, we are
Pay more attention.
We're seeing a lot of people throwing a lot of different things at this to try and really solve the underlying problems. Clearly, no one has solved that yet. Unfortunately, we'll have to leave it there. Peter Morici, Professor Emeritus at the Robert H. Smith School of Business at the University of Maryland.